Good evening, traders. It is December 13th, 2022, CPI day. What a glorious fade off the top, guys. It stays like this that just keep you interested. Dow Jones up 0.3%, S&P 500 up 0.7%, Nasdaq 1%, Russell 2000 0.8%. We have earnings loser ABM down 3% after earnings. Let's talk about. We'll check the futures market here in a second. So, CPI day. What to say? Well, we had the smallest 12-month increase since 2021. Inflation cooler than estimates. Point 0.1 on overall CPI. Core CPI 0.2 rose by the smallest amount since December 2021. In the core, shelter was that so shelter still increasing at a rate of 0.6%. That is preoccupying. So the November headline and core CPI came in below market expectations, as you saw. You noticeably did not hear me issue the clarion call, the loud conch, somebody buy something. Those words did not utter my lips this morning. So deceleration within CPI was broad, with a variety of categories coming in below expectations, as you guys saw from the report. There were only a few offsetting surprises. To the high side, the report potentially reduced risk that the Fed might have to push the funds rate above 5%, swaps implying 4.88. The CPI could inform tomorrow's FOMC policy meeting, which will include an updated dot plot for future rate extensions. If you notice the ZQZ 2022, the Fed futures tool implying the same probability rather. So rates dropped led by the 2-year yield, and futures markets pulled down expectations for the 2023 terminal rate towards 4.8. Initial stock prices surged through the U.S. opening bell, led by Nasdaq and tech. Equities started to pair gains after the first 30 minutes, as we saw. Amazing fade call-outs in the market today. You guys did a great job calling out solid trade ideas, and faded further into the afternoon. For the second straight day, U.S. Treasury supply was met with a lackluster demand. 30-year bond reopening tailed by 3 basis points, a little more than 24 hours ahead of the FOMC and the tap dance known as the Powell Shuffle. Gold prices jumped 2% and the U.S. dollar slumped towards a 6-month low. WTI crude prices climbed 2% after the final OPEC monthly report urged caution as producers cut their quarter one demand outlook. It's all about Powell tomorrow, guys. In the U.S. session, the SEC released normal FTX complaint against SBFRS. Investigations into other securities law violations and other entities, persons relating to the alleged FTX misconduct are ongoing. More people are going down. So we talked about the CPI. We had the 30-year bond reopening, drawing 3.13 versus the 3.930 prior. Bid to cover ratio was 2.25. We had a bipartisan group of lawmakers seeking to ban TikTok from the U.S. Interestingly, Meta was not listed as the projected beneficiary of that ban, which I thought was fascinating. They had YouTube Shorts and Snapchat and Instagram. So I guess Instagram is part of YouTube. Meta, rather. Sorry. And the Ukraine front, reportedly U.S. finalizing plans to send Patriot missile defense system to Ukraine. In other headlines today, Morgan Stanley said a 50 basis point hike tomorrow was already telegraphed. It sets the stage for 25 basis points in February as job growth trends toward the 100,000 mark. We expect no further interest rate hikes at the March FOMC, leaving peak Fed funds rate at 4.625. That was from Zentner. Carl Quintanilla reporting on CNBC. President Biden's came on at 10, saying hope prices get much closer to normal by the end of 2023. He also said inflation coming down, things are headed in the right direction. Don't hold your breath, Bubba. COVID cases, 50 cases reported in China, critical condition. More biotech medical news. NVS presents pivotal phase 2 apply PNH data at the ASH demonstrating investigational oral monotherapy iptacopan superiority over anti-C5. Tesla came out saying they're finally shipping Model S and X to Europe amid huge delivery push. That was from Inside EV. Goldman came out with a bearish note on Brent, saying they cut their first quarter 2023 Brent oil forecast to $90 a barrel. Sam Bankman-Fried was charged at Manhattan Federal Court. There's going to be a lot more to come. Did you guys see that story that it's not Coinbase, it's Binance halted withdrawals. They have like a $3.5 billion liquidity drain already from redemptions. Unusual put in call activity today. Was hard to call since everything was going bananas, so I'm not even going to cover it. So let's talk about the market. Bunch of us in the room, Kelly, Kathy, were all pretty convinced that this was going to be a fade. I was thinking a 50% retracement, and instead we got a test of the closing pivot and a slight bounce. So great call for those of you who were fading the market. Sick moves in Tesla early on. Tesla continuing to display tremendous weakness, hugging the declining bottom line here as we head lower. Look at this volume. I don't know that this is ending volume, guys. I think $150 avenue is around the corner for Tesla. Not good for Tesla longs. If you're short, Elon keeps tweeting. Apple, we had an orderly decline and a very strong showing by the bulls at 144.46. The main pivot here, also the closing pivot. Microsoft bounced off to 53.82 and strong rejection off the daily 200. Let's see. Meta 118.74. What I'm enjoying about this market, especially on these high volume days, is the pivots are really holding well. It's a pretty easy to read market as far as the price action when there's volume. Google, beautiful fade off the 98 high 98s. You basically got a bear flag on the day, hovering over the 200. Nvidia, gorgeous. Came into the 176, the top channel line and the trend line, and held. I still like Nvidia a lot. Netflix, she looked good there for a bit at the open. I tried a small long in Netflix, made a little money, and then trailed out. You have a beautiful setup for tomorrow. Tomorrow morning, Netflix falling wedge snapback through 322.50 looks amazing. Snowflake, as pointed out by Eddie, nice bearish consolidation here. We could get a really nice legs 2 and 3 tomorrow back to 139.80 off the top of the channel. Looks fantastic. The spiders, as Kathy noted, we have a beautiful piercing reversal back to the 200, back to the trend line. Strong rejection off the primary pivot in the spiders here, $400.18. Not surprising since the expected move last week, as the options market implied, was the top of this range, $400.18. Like I said, the pivots are holding relatively well. Again, this looks like a leg one of 2 or 3. So good stuff. Solid market today, and really not much complaints from me at all. I started the day with a modest long in Moderna off this 188.34. I added on the pullback with conviction, and right here we held 189.47. Set the target to 207.74. I'm sure a few of you snickered quietly in your computer rooms, saying old JR has finally lost it, and we tagged it, crossed it by maybe 20 cents, and pulled back sharply. Three-wave corrective back to the base. Beautiful move. I sold my full position into 207.74 and had a civil breakup. It was one of those, it's not you, it's me, and we agreed to be friends. Netflix took the long here in NFLX, sold the pop, uh, and I believe I bought it again here, and it just didn't work. But overall, it was decent day trading in Netflix. That V bottom turn and break of the doji through VWAP gave us a nice pinch there. Tesla, I was scalping this morning. Uh, I uh, I took this little inside bar here. No, I took this inside bar. Bought the bullish hot dog. I was looking for the 2-minute 200, which was about 174.20. Didn't get there. Stopped out. Kelly was short already, I think, along with a few other people. I joined the party through the pivot, and that was just a glorious trade. Tesla did not disappoint today. We called the measured move here, and it got tagged around 12:30. So, like I'm saying, this measured moves are working, pivots are working, so much easier market to trade with higher volume. So for tomorrow, I'm expecting some nice moves early on in the morning, and then the doldrums after 11 to 2 o'clock. So keep your powder dry after the open tomorrow. It could be mind-numbingly still and boring for 2 hours before the clown show officially kicks off. Yeah, it was a nice trade. Don Wilson can't hear me. Can I get a mic check? All right. So that's the plan for tomorrow. Tesla ended on a bear flag on the day. It looks like it wants a whole leg lower. We'll see. This thing is getting sold in brutal and barbaric fashion, which is just how we like it. So maybe more opportunity in Tesla. The only issue is you're at the bottom of this trend line here. So if it breaks, it might be voluminous and tricky. We'll see. So lots of interesting setups. I do love that Netflix falling wedge to the to 319.46 and retracement back through 326, maybe 328 looks really good. I hope they just don't gap it up too much tomorrow, but it looks good, very very good. Netflix is still holding the trend line. There's a smaller trend line here as well forming, so if it holds this pivot, you could retag through 31.37 if they decide to run it tomorrow. So that's the trade summary for today. When I came back, I scalped some Tesla short and some Qs um, right through here down to the 200. That was cute. And you maniacs were just slaughtering Tesla all day. Well done. I mean, just a beautiful move. Fantastic. Really, despite the split, I still love how this thing trades. PI was good today. Yeah, just so much volume and liquidity in the market. All right, so got an email here. Andrew's email. Let's take a look. Andrew, you're okay with me sharing this? All right, cool. You gotta ask, folks. Yeah. Oh, the email? Yes, I can. You want to read along, huh? Well, the text, there's nothing in the text of the email. Andrew was extremely conscientious and actually wrote it out on the picture. So Andrew wrote, "This is a perfect example of my lack of where my lack of confidence comes from." So Andrew shorted the sell setup there. Okay, you had a sell setup here with a little bit better risk reward, uh, but that's fine. Shorted 120.15. Uh, 240 bar below. Inside bar break to downside confirms rejection of the upper channel line. Correct. I like that you're using cogent technical analysis terms. Greens are covers, so you covered into the pivot here. Very nice. Prior into the previous bull flag pivot, looking at the next pivot low, 118.68-ish. Okay. All right. Get it. So then you wrote, so how do I tell these apart? They both looked good to me. The cues were on their first trade likely what made the cues on the first trade are likely what made it work. Where it is on the second trade, the cue started to go up. Yes, but that's not why this one most likely didn't work. In the moment, the second trade, that shooting star short looks like a great one, but one bar later, I'm out. Yes, you are, sir. Um, so that was 304. This destroys my confidence that I know how to play these technical formations. I feel confident in my ability to draw them, but not in how to trade around them. So you're in the very long and painful process, Andrew, of going from technician to trader. It's very difficult, and it just takes a lot of repetition and making sure you manage your risk and trade small enough so you can get through this process without depleting your account. Um, so let's talk about a meta. Eronimo, should we talk about the meta? Yes. All right, so this is meta. Okay. 118.74 held. And this was your first trade, right? Here, right? Am I looking at the right chart? Let's see. Your first trade was at 1440, so that's 240. Yeah, okay, fine. Are you using 1 minute charts, bro? Oh, you're on the 5 minute. Okay, that's fine. Okay, so shorted here. Okay, and then you came in at 304. Okay. All right. Oh. All right. Everyone, meet Wendy. Wendy loves long walks on the beach. She loves the outdoors. And she loves ripping people's faces off when they misread market structure. So, yeah, Wendy, Wendy and I have had a complicated relationship uh, for a while. It's one of those friends you learn to love. Okay, so you guys ready to get white coffee in? All right, let's talk about the cues. Okay, what happened here today? You have to. Okay, we're equity traders, right? But we're trading a market full of futures traders. So you have to imagine, if you can, right? I don't care if you call this three rising soldiers or it doesn't matter. For the purposes of this exercise, it doesn't matter. Wow, I really don't know how to draw. This is a problem. I need a drawing assistant. Okay. This is what the markets did. What is this? What do we call this right here? Anybody? Money. An inside bar breakout, right? A breakout, right? What happens when you have a breakout that of such enormous magnitude, right? A momentum move so enormous after the market open. What's most likely to happen all the way through 294.67? Profit taking, distributions, right? Retracement. Okay. So is it fair to say, as we were talking about this morning, that a two-wave corrective move was very, very possible given a breakout, right? Retest failed, right? This was your preliminary support, PS. This was your automatic rally. This was your selling climax, right? What happened after your selling climax? Yeah, she had a bad hair day for sure, right? Igniting moves typically come back in on two-wave correctives, okay? I'm telling you, drawing assistant is a must. All right, so selling climax, preliminary support. Okay, so the market was seeing this as what? If this is your phase A of the move, right? You had a big breakout here and a two-wave corrective. What do we call this zone in terms of it's a base accumulation, right? What key level held at the bottom here? Correct. It's definitely a B phase. What key level held, guys? What were we talking about as the cues were coming in into the selling climax, into this volume? Yes, the closing pivot. Very good. Okay. Very nice. Okay. So we had a phase B here, right? And what happens when you have an accumulation zone and then you put in a higher high? What typically happens if you break through the pivot? What was formed here? An up move. Yeah, exactly. A bull channel, right? Makes sense? Is everybody following me? Okay. All right. So we channeled higher, we held a pivot, we had a really nice pop into the pivot of the first leg, right? And what happened here at the top of the channel? Not a trick question. As you tag the 200 and you had an up thrusting candle through the channel. Yeah, failure, exactly. You were into a demand zone, a supply zone. The candle, the pattern, the bull flag showed no continuation, and you rolled over to the bottom of the channel, right? Okay. So is it fair to say that a short at the channel top has a much higher likelihood to work than a short at the mid channel? Exactly, a retest. Okay, perfect. There's a commandment I live by, Andrew, okay? Thou shalt not short the first corrective wave mid channel in an uptrend. This is a low probability trade, okay? You're bouncing off of a demand zone. You're breaking the pivot. You're getting signal bars that don't matter here. If you're seeing a shooting star, hammer, shooting star, inside bar, there's no appetite to short the mid channel on a two-wave corrective move. It's also an inverse mini head and shoulders, 100%. Why is there an inverse head and shoulders, Kelly? You know the answer to this question. Kelly's drinking beer. It's because an inverse head and shoulders is a pattern that confirms accumulation. Okay. Within channels, corrective moves are usually two-legged. Whatever. Hashtag legalize it. Okay. So if you're at the bottom of a channel, you break through a pivot with a high volume bar. This is a very low probability trade. Okay. Notice that as soon as we came near the 200, the upper channel line and the pivot, that there was no more appetite to break the channel line. Okay. Here's, imagine we're playing a game, right? And you have to fill in the blanks. Now, if one of you is a freaking savant, please don't ruin the fun. If you're trading purely on candlestick signals, this is how you're seeing the market. Okay. Price action fills in some gaps. Market structure does the rest of the work. If you're not looking at market structure in conjunction with price action and you're trying to trade candlestick patterns in a vacuum, you are not going to see the big picture. Why I wrote I Love New York is beyond me. Does this make sense? Or is it a little too esoteric? All right. So, Andrew, repeat after me. I will not short the second consolidation in a two-wave corrective move with inside the channel. It's going to save you a lot of money. There you go. Don't diddle in the middle. Boom. All right. In my opinion, that is very likely why that trade didn't work and why it was hard money. Oh, I've been on the cues. Well, we can go to the meta. Geronimo, go to the meta. You're on the wrong chart. Same thing. Two-wave corrective. Bullish reversal. Inside bar, explosion. Inside bar, signal bar. And this is where people get suckered, right? You saw the 200. You saw a topping bar. You said, "Oh, here's my chance." You said, "Here's a rising wedge." JR likes shooting stars off of rising wedges. Time to make some money. Not in this case. This is purely my opinion, and it's part of how I look at um, trading channels. So thank you for sending that email in, Andrew. I hope that was helpful to other people. And yeah, it's a great trade example. Thank you. Yeah, good times. Anybody have any trades that you want to discuss today? Any questions? By the way, open house attendees, uh, we are making fewer fart jokes during the open house. We took out the nice china, but other than that, this is what we do every night. Uh, this is the nightly meeting. Do you always use 2 minute charts? I don't. You really use a 1 minute very much unless it's news flow. I trade mostly off the 5, the 15, and the 60. The 2 minute just helps me fine tune entries. It's very easy to get shaken out of a 1 minute chart, Larry, for me personally. If you're like a hyper scalper galore and you have the nervous system of a weasel, and you want to trade like that, that's fine. It works for a lot of people. I want to be doing this business till I'm in my 60s and 70s, and I don't want to keel over from a heart attack. So I like longer time frames. But and there's nothing wrong with the 1 minute. I just think it's very easy to get shaken out of it unless you're trading very, very quickly. No, but it is important to incorporate other important elements of the market. The candlestick. I remember I switched to candlesticks in like 2012. Everyone was like gaga over Steve Neeson, and it's a very helpful way of showing bars. But I think the problem is, like everything, people overreacted and started ignoring traditional Western technicals and technical analysis, and I think it's a problem. Yeah, Steve Neeson's the man. Can I review how I got my target in Moderna? Sure, David. Moderna. You got to look at the weekly and the daily, bro. So go to the swing charts. So Moderna is been putting in a giant accumulation base. Right here's your last point of support, selling climax, automatic rally, spring. Okay. Uh, Here's your backup, your retest. Watch this level, 189.47. It's the top of a range. Look at the volume today. So here's how I see Moderna. Okay. Moderna broke out of a bull flag, failed the flag of the 200. Right. The people have been accumulating this from the 115s. Right. So here's your two-legged move, your bull flag. Third leg failed the measured move. Flagged, bearish consolidation, little bearish Darvis box. Two-wave corrective back to the bottom. Got accumulated. Falling wedge. Two-legged move. Okay. This attempt and this attempt are related. Do you see what I'm saying? Does that make sense? All actions in the market are related. So when I'm looking at a gap up with uh, two brutal red days, and a bunch of shorts trapped, right? And 188.34 taken out, I'm thinking we're going to have a lot of strength in this name. What happened over last night with Moderna? Do you guys remember? News. What was the news? Yeah, a cancer vaccine. Why are they related? Because institutions don't buy in a day, they don't buy in a month, they buy over several months, right? That's why these are, that's why these bases form, right? Why doesn't Moderna just go to zero? It's because you're in a demand zone here. You can clearly see it. If you can draw a straight line, you can see that Moderna, right? Let's go to the weekly, right? If the support of Moderna was 124.63, here are your springs, right? Not letting the price drop, and this is being accumulated, right? So when a three-wave move fails and gives you that two-way corrective, it's very likely that the same pattern is going to make the same try. 207.74 was what? Let's get white coffee in again. What do you call this? What is this called? Anybody? This has a very specific name, right? This was your selling climax. What comes before a selling climax? This is important. What comes before a selling climax? Supply zone. The term is, oh, nobody? Your preliminary support, right? It's your last pivot of support before buyers give up, right? So these people are trapped in Moderna. People who bought this hammer, people who bought this doji, people who bought this engulfing day thinking this falling wedge was going to pop, are all trapped at 207.74. There's people with limit orders just wanting to get out even in Moderna at 207.74. The pivot is drawn based on basic understanding of how market cycles work. It's not a random line. Oh, there's a bottoming tail here. Let's just draw a line here. No, that's not what why this line matters. This line matters because you had two-wave corrective. They tried to hold the level and then they finally had their selling climax. The pivot before the selling climax is often where you're going to run into massive overhead supply. Does that make sense? I don't trade options in Moderna. I promised my rabbi I would never do that again. Friends don't let friends trade Moderna options. We should make a we should make a t-shirt. Rabbi Yankovic, are you there? Anyways, that's why I hope that wasn't too long-winded, but that is why Moderna was a good long idea. It was a pro gap through a key uh, pivot level at the top of the chop box, and the preliminary support pivot to a 774 was was where you have all the trap buyers before the climax. So that's the idea behind that trade. Now, I'm slowly introducing more and more terms into the room since I've taken it over, but intraday it's hard to like stop and explain. But that was the idea. Glad it worked. Uh there are people that were waiting 2 decades to sell Cisco, bro. Remember Cisco Systems? Remember the bull flag, all these dip buyers? Look at this monthly turnaround bar. There are people who've been waiting since 2001 to get rid of this sack of potatoes. Dude, you say Kathy Wood, and I just get jittery. It's crazy. I'm not convinced she's fully human. I'm holding them uh, into January. I think we're going to have a rude awakening. Uh, it's a lotto play. You know what I mean? They're cheap. You buy 10, 20, 30 contracts. If it works, it's great. UVXY, if you look at the VIX, right, we're buying the apex of this consolidation off the monthly 200, and we were buying the VIX here, had a nice pop. I still think we're going to see the high 20s. If it doesn't work, no biggie. Oh, you took the February's? Nice. It's very cheap insurance, you know. So yeah. Anything else you guys want to talk about? Comments, complaints? Just voice your angry emails now. Oh, you like that too? Yeah, but yeah. I think we're due for a pop. You know, the minute I see markets in turmoil on CNBC, I'll just look over at my position window. Yes, there was. That one's going to take some time, and once rant mode is activated, it's hard to stop. So I'm going to do that one tomorrow. Um, do you post your trades if I miss your verbal comment? I don't, Larry. Um, I don't have a way of, and we don't have a position window, so it's uh, it's really hard because I'm watching news flow all day long and taking my own trades and watching about 20 charts, so I don't have the extra pair of hands. Nice, Kelly. I think that trade's gonna work. JR, if scared money doesn't make money and no way confidence is to book green, how does someone get the monkey off their back? How does someone get the monkey off their back? Well, there's a lot of reasons why people's confidence is shattered. Uh, I've had my confidence shattered, I don't know, 20 times during my trading career. There's people in this room I've spoken to over the phone, seven-figure traders that call me up and say, I don't know how to make money anymore. I see the setup. I'm either too early or too late. I let my losers destroy me. I take my winners when they're up for 20 cents, and I can't seem to be able to hold the trade. My hands just fall apart like wet paper towels. It's a vicious cycle. The more you lose, the less clearly you see the market, the more your uh, loss aversion impulses kick in. Humans are not naturally wired to embrace risk and embrace loss. It's a very difficult skill to hone, and it's a spectrum, right? It's not like you go from A to B, and this is like the Rubicon of confidence, and then you arrive at B, you get your black belt in trading, and you can start judo chopping Tesla for the rest of your life. It's a perishable behavioral skill that must be constantly not just honed, but fed and cared for, right? I've seen multi-million dollar traders quit trading because they lose their edge, right? You have to embrace loss. B. You have to take good losses, knowing they're good losses, and assign the proper meaning to those losses, right? Andrew, for example, I'm not picking on you, Andrew, right? Andrew took a loss today. He wasn't sure why. When you're not clearly understanding why something didn't work, how likely are you to embrace risk, watch the trade chop around, knowing fully well that you're reading the market correctly, right? Remember, I love New York? Is that the right number of syllables? Isn't there a TV game show where you have to guess the, well, whatever. Right? So if this is, I don't know how to spell. Anyways, if this is how you're seeing the market and you're not confident, right? And you're surprised that a trade is working or so enormously grateful that it's working that you're taking tiny little wins. And then because you're not sure what your stop should be technically or whether you should add to a losing trade because your strategy isn't working properly, if all of those things aren't lined up, what's most likely to happen? Oh, that's right, Vanna White. What what behavioral pattern are you most likely to engage in? Anybody? Yes. You're it's a trading algorithm designed for a robot whose only purpose is losing money. Like if you were going to design an algorithm for losing money, this is how it would behave, right? When the laws of probability are in your favor, you would take profits as soon as possible, and when they work against you, you let those losses stack on. That's the behavior that loss aversion generates. It's a perfect algorithm for losing. Yeah, along with all the other compulsive behavior, right? Tilting, over trading, but that is formed by many things. Some of them are habits, some of them are clearly understanding what is actually happening so that if whatever trade you're not in isn't working, you cut your loser short, right? Kelly always says it's okay to be wrong, it's not okay to stay wrong. So that is it in a nutshell. How you do that is the question, right? Like all these people, I see all these snarky replies. Well, yeah, cut your losers short, let your winners run. How am I supposed to do that? I don't have a crystal ball. I don't have a crystal ball either. I take a ton of losses, right? But I give trades a chance to prove me right or prove me wrong. Being in the right place and doing the right things makes the difference between being able to let winners run and cutting and cutting your winners short, never giving them that opportunity. Imagine a coin flipping game where you had heads on both sides. How likely are you to win that game? That is what you do when your risk to reward ratio is incredibly messed up. So, how do you do that? You avoid compulsive behaviors, you avoid over trading. Your skills need to be to a level where your skills and your rules are totally aligned. Like we've talked about this before, there's a lot of people in the open house, so I'll go over it again. It's right, there's you're taught risk versus reward. This is true. Do all trades have the same do all risks have do all trades have the same probability of working? Like if I just shorted every shooting star I ever see, is that going to be a successful strategy? No. It's probability. Pardon my 4-year-old's handwriting. Probability that makes all the difference, right? Now, you have your psychology to manage. By psychology, I really mean behavior. Are you going to be able to manage your behavior properly if you can't interpret what actually happened accurately? Like if this loss didn't work and you attributed the reason for this trade not working, going back to Andrew's trade. Sorry, I'm picking on you, Andrew. If this short didn't work, you're going to make the following interpretations. Maybe you're going to say to yourself, I suck. Maybe you're going to say, my strategies don't work, right? You're building a negative feedback loop of self-confirming bias that's inaccurate, right? So your behavior is directly linked to your technical analysis. I'm just going to say TA. If your technical analysis interpretation of all of the elements of the market, right? For me, it's tape reading, order flow, price action, patterns, and structure. For someone else, it might be something completely different. It does not matter what your approach to the market is. Okay? You have to find your own voice as a trader. If you try to follow me, you know, bar by bar, you might fail miserably. You're a different person. Whatever it is, okay? You have to find a way to properly read what's happening in the market in a discrete and repeatable way so that when you take losses, you don't interpret the losses in a way that feed your self-confirming bias, because your self-confirming bias and your psychology, are they going to affect your technical analysis in a negative feedback loop? Yes or no? Are you going to be able to see the market clearly if you're feeding your brain this kind of garbage? Most likely not. So then your technical analysis suffers, and then what happens to your behavior? This is a feedback loop. If you can't interpret what's happening in the market to enhance probability of a trade working, what's going to happen if your technical analysis is subpar? That's going to affect your behavior, right? Okay. Make sense? So here is the third pillar. Pillar 1, pillar 2, pillar 3. Money management. This isn't sexy, guys. I'm sure you've heard people talk about money management till you're green in the face. When I took Moderna today, and I had a $4,000 risk, right? When I was up 2R on that trade, did I just say, "Oh, guys, uh, my wife just made empanadas. I'm gonna hang it up, let this trade run, and see what happens"? No, I applied my money management rules. They are rules, folks. I applied my money management rules, took risk off the table to do what? When I'm at 2 times my risk, what happens? You guys who are in the room know this very well. Yeah, now I have a profitable trade no matter what happens. Am I going to hit a home run every time? Am I going to hit a home run every time? No. I'm putting myself in a place where I can hit home runs, safe from big losses, and more importantly, safe from negative feedback loops that affect my psychology, affect my technical analysis, and affect the very money management that's there to support my capability to be in a place where I can succeed. Make sense? So, to answer the original question, what does it mean to lose well? It means having these three pillars of trading in complete analysis. So if you take a trade that didn't work, you knew what your exit and your target were. You know that if it didn't work, it's not because you suck. It's not because it didn't work. Maybe you tell yourself, okay, that was a bad trading idea. Here's what I did. Now I see it. I'm not going to do that again, right? You cut the negative feedback loop and you learn to trade another day without your behavior being compromised. So that's what it means to lose well, to take good losses. They are losses that don't affect your psychology in negative ways and don't affect your ability to read what's happening clearly and to manage your money cogently. And in order to do that, you need a trading plan and you need to be able to understand what you're going to do before the trade happens. Because personally, me, I go from Dr. Jekyll to Dr. Stupid the minute I get into a trade. Okay? My IQ and my IQ is already in the double digits, so I don't have a lot to going for me in the brain department. Okay? I'm able to let my trading plan go on autopilot, supported by solid technical analysis and money management that's going to protect me. That is what it means to take a good loss. You're not going to be able to trade the markets without constantly losing. That is impossible. Okay? There's this myth, the trading guru, the ninja, who seems to always have a crystal ball and always makes these great trades. What's happening is your selective bias is looking at a trader. There's a few murderers in this room, like straight out of Compton killers in this room. You know who you are, right? The problem is they take a ton of losses too, but you tend to focus on all the winning they did. So if they're doing all this winning because of your selective bias looking at these trades, and you're not doing all that winning, it must be for all these negative reasons you're going to invent in your brain, and the negative feedback loop begins. So then your technical analysis suffers. You're not sure what to do. You're not sure if this was even a good trade to begin with. You've got risk on in the market. Your behavior is affected. And because your behavior is affected, when it's time to manage risk, what happens to your money management? Go straight out the window. This is called, some of you old time traders know this term, eating like a bird and crapping like an elephant. This affects every single trader I've ever met. This is not a problem that goes away, folks. Okay? So, trading is all about taking losses properly. Losing well is half the battle. End of rant. Eddie, just so you know, I will be rooting for Morocco. Pac-Man says, just kidding, bro. We can still be friends. I know you. All right, small account, fearful trader here. At 9:40 a.m., I passed on Moderna because I couldn't afford shares. And this, if you're a small trader, uh, you live on the corner of J.P. Morgan and Apple Avenue. You should, in my opinion, not be trading a high spread, high momentum name that can wreck you irreconcilably. Right? If you have a $500,000 account and you take a $2,000 loss, that is a tiny percentage of your account. If you have a $2,500 account, even taking one contract in Moderna can wreck you in horrific ways. So if I were trading a very small account, I wouldn't even be touching the name. At 9:40, I passed on Moderna because I couldn't afford the shares in present. Okay, took Netflix instead, only to see the reverse in a few bars, making a long position. Uh, so Pac-Man, I'm not sure what time you took Netflix and at what price, so I'm unable to make a more intelligent comment on that one. EJW says, "Greetings, Jared. Thank you for opening the room for the open house. Appreciate the insights presented. Working currently with DO as his low is how I found T3. Would you take a look at SLV and share my wisdom?" Well, not sure about my wisdom. So, you know, you can all see the clear downtrend in silver. It's channeling lower. You have inverse head and shoulders bottom here on the strength of the dollar. And this is your leg one, leg two. You're at the top of the channel. Uh, you really need to look at the dollar when you're trading precious metals. It's a dollar inverse correlation, as you guys all know. So if you're longing silver here, you're betting. Uh, where are all these lines on my chart? You're betting that the dollar is going to fall much lower because you still haven't broken the downtrend in silver. 2350 is your breakout. B, I will trade anything. I will trade boxes of ticky tacky sticks as long as I can see a montage box and a chart. Like I honestly, some half the time I don't care what I'm trading as long as it's liquid and voluminous. You know, I mostly trade futures and equities. What chart do you what chart do you look at for the dollar? I look at the DXY, the dollar index. Yeah, you can look at UUP. If you've got Thinkorswim or TradingView, you can look at the DXY. I don't think it's available on TC2000 or some other platforms. It just depends what platform you're on. Yeah. I trade the ES mostly. Uh, I came from the institutional side, and I was an energy trader originally. Crude is a beautiful instrument to trade. Nat gas I like, but I mostly trade the E-minis. Not for beginners, that's for sure. Can you go over more in depth how institutions accumulated shares? Are they selling on pumps? Let's say Moderna goes up to 10. Well, the technician, it depends. Are you guys familiar with the term composite operators? So, Wyckoff, uh, so Wyckoff saw accumulations and distributions in the market as uh, being largely responsible by large institutions, heavy hitters. He called operators, um, and when you're talking to a hedge fund or a large institution, they're looking 1 to 5 years out, sometimes longer. Yes, that's a Wyckoff term. They're yeah, composite. Um, so they're what is like okay, if you're who likes billion what's it called? Billions. Bobby Axelrod. Okay. That's largely based on Steve Cohen. It's a fantastic show. Great writing. Like, what is one of the most prized things in that show? There's two things that are critical to their strategy. Kelly's like egos and hot chicks, bro. Information? Yes. Having an edge, being early and being invisible, right? So operators traditionally accumulate silently, right? And hopefully before other people know it. And they accumulate over long periods. Now, this is somewhat hampered by SEC regulations now, but traditionally they buy demand zones, right? And they wait for retests, especially springs, etc. Make sense? So for us, the technician, we're looking at, uh, I mean, not everybody has to do this, but I like to look at accumulation schematics to get an idea of how and when a market is being accumulated. This concept is fractal. It works across all time frames. It works intraday, it works on the weekly, the monthly, the daily, etc. Any other thoughts? Uh, Day trading. Okay. I have friends who uh, get handed a client book and say, you need to accumulate $100 million worth of Nvidia. Do you think they're worried about their P&L the way we worry about our P&L if they're a buy side trader? Hell no. It's a completely different game. We are little piker fish in the ocean. We're little pilot fishes. Fishes? Little pilot fish, basically trying to catch the wave. People trade the markets for all kinds of reasons with all other kinds of goals in mind. If somebody hands you an order ticket like that and you manage to buy Nvidia quietly near VWAP or whatever metric you're given, anchored VWAP, uh, uh, there's a lot of different metrics. Then you're a winning trader. It is what we do in some ways is far more difficult than what say institutional buy side traders have to do. Anchored VWAP, it's anchored by time. Here, I refer you to stockcharts.com. So, yep, tomorrow should be fun, guys. Let's look at the calendar real quick. So, we've got mortgage applications at 7, the Atlanta Fed business inflation expectations, and then the FOMC and the Fed chair press conference. I really don't think a lot is going to happen after 11 tomorrow. So, definitely trade cautiously, guys. You got it. To the open house attendees, how are you liking the open house so far? Those are traders voted by the community who are experienced, long-time traders. There's a lot more diamond traders, and you realize we lost a lot of the diamonds um, when we upgraded the room. We gotta fix that. All right, awesome. I'm glad you guys are enjoying it. This is pretty much the room. What you see is what you get. Oh, device changes can affect it. Okay. Good times. All right, guys. So we'll see you tomorrow, bright and early, and we'll uh, we'll take it from there. Keep your powder dry after 11. It could get real choppy. Okay. All right. Love you guys. We'll see you in the morning.